Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario on the daily time frame, where we are looking for a multi 1-2, waiting for this blue 1 to end, followed by a 3-wave corrective structure in the blue wave 2, with the invalidation being this low at 65.5k. The common target for your wave 2 is between the 0.5 and the 786 Fibonacci, taken from the low to the current high that we have on the chart. However, in this move towards the upside, preferably we are still looking for 1, 2, 3, 4 and one more move up in 5 to take out the high, to then finish your blue wave 1 and then start the retracement. So these levels might still move up a little bit, but your common target nonetheless is the 0.5786 at the moment. That would be 69.6k to 67.2k, with the 382 being a uncommon target for a wave 2 at 70.5k, but a target nonetheless, and the 886 is a level you preferably do not like to see hit. Now the bearish scenario on the daily time frame is now a flat structure, a bigger flat structure, where we then have a 3-wave structure in a wave A, 3-wave structure in a wave B, and then a 5-wave C to the downside, where most commonly a wave C is taking out the low of your wave A. Now a minimum target for a flat is the 0.9 Fibonacci, taken from the start to the end of your wave A at 72.2k, which we have touched. The most common flat, however, is an expanding flat, and the target for wave B in an expanding flat is the blue box that you see on my chart, the 1.236 to the 1.38, 77.6k to 83.3k. If price would move up and hits the 1.618 here at 89.1k, then the probabilities for this scenario will significantly reduce. Now inside this wave B, however, you need to count a 3-wave structure to the upside, which means that if the correction ended over here after an A, B, C, and all of this is a 3-wave structure, you would then need to count this as a W, X, and then a wave Y. There are not a lot of different options left. Potentially, you can count it as a W, X, Y, X, Z, but a W, X, Y, X, Z is very rare, never really preferred unless everything else fails, and a W, X, and a Y also still works. If you take a trend-based fib from the start to the end of your W here to then the end of your wave X, then you can see you are still around the main target area for Y. The only issue with the WXY structure to the upside is that your wave X has hit the 0.7 Fibonacci here during the retracement, which is lowering the probabilities for a double zigzag WXY as well as a triple zigzag. By the way, it is not an invalidation, it just impacts the probabilities negatively. And if you would end wave A at this low over here, then you would need to look for an A, B, and then a wave C to the upside, with then an internal 1, 2, 3, 4, 5-wave structure, where you can then take a trend-based fib from this low to the high of your A, to the low of your B, and you can see you are now at the 1.618, which is still a target for a wave C. If you pass the 1.618, however, then the probabilities decrease for that scenario. At the moment, however, the probabilities are not higher for this scenario, but we gotta be aware, we always have to be aware of both bullish and bearish scenarios, and this is the new bearish scenario here on the chart. If we then go to the 1-hour time frame, then on the 1-hour time frame here, your bullish scenario, where you are looking for another move to the upside in a wave 5, is the following: 1, 2, 3, 4, and then a wave 5. The common target for your wave 4 is between the 236 and the 0.5, taken from the low of 2 to the current high that we have on the chart, 72k to 70.1k, invalidation 69.3k. After a wave 4, we're looking for a wave 5 to the upside, a final impulsive structure, after which we then look for a retracement towards the downside. Now what is important, however, is the volume, because if you're looking for a 4 and then a 5 to the upside, you're making a higher high and you want to see a higher high made on a lower amount of volume. If volume is going to increase, if price takes out this low, then the probabilities are there for the potential continuation where we just have multiple 1-2s, 1-2, 1-2, and you just start a wave 3. So this wave 3 is then going to move to wherever the high is going to be, as the highest amount of volume is by far most commonly positioned in a wave 3, not a wave 5. So if you do move up and volume is increasing on multiple time frames, not just on a 1 hour, but let's say a 4 hour, 2 hour, 12 hour, that is when we have to be aware of the potential of this wave 3 extending to higher prices. But at the moment, we are here looking for a 5-wave structure to expect a wave 5 to end and then look for a retracement to the downside. Now, your more bearish scenario is that you have a finished impulse to the upside. So we have our wave 1, 2, 1, 2, 3, 4, 5 to finish 3. This is your 4 and this is your 5. Now, there's two reasons why the probabilities are at the moment lower for this scenario on the 1 hour compared to this scenario on the 1 hour. And that is, first of all, that you have a very high amount of volume in your wave 5. And you can see that this red candle is actually above this one here. So arguably on the 1 hour, you could say there's more volume in the final move to the upside, which is a wave 5. However, it's more clearly visible on a 2 hour. You can see higher amount of volume. 3-hour chart, higher amount of volume. 4-hour chart, higher amount of volume. So you can see the most recent move to the upside currently has the highest amount of volume. And that is actually not what you like to see in an impulse. As mentioned, you like that to be a wave 3 and then still look for a wave 4 and a wave 5. If a structure ends on a high amount of volume, it is more commonly a wave C or a wave Y, which actually would be bearish. Now, the second reason why the probabilities are a little bit lower is because of the size of this range over here. So this range in time is still shorter than your wave 2, while more commonly a wave 4 is longer in time than a wave 2. And also, if you take a fib from the lowest point of your wave 2 to the high of your wave 3 and you toggle on the wave 4 targets, and you can see that price here never retraced into the common target area for a wave 4. So arguably that's actually a third reason. So you have the volume in 5, the length in time of 4, and the retracement of 4. So the volume highest in a wave 5 is uncommon, right? It's not actually what you like to see in an impulse. It's more common for a wave C or a wave Y. Wave 4 is shorter in time compared to 2, and your wave 4 did not retrace to the common fibs of a wave 4. Now, of course, what we are looking for is eventually a bit of a retracement, right? So we have a daily naked point of control to the downside, a little bit of support. But if I open all of my levels, then you can also see that below the daily naked point of control, of course, this structure, right? So a wave 4 of a higher degree likes to retrace to the wave 4 of a lower degree. So this range is important support, but I don't have too much going on over here. So that could be a risky area on the chart, because then there's next support is here 67.3K, right? Of course, potentially a support resistance flip, but there's not a lot going on here other than this range and the daily naked point of control. If we then look at the CVD divergences, then the bearish CVD divergences here played out. So we had bearish CVD here as well. These two played out. As you can see, we had some bullish CVDs as well, but that means you have counter CVD, both bullish, both bearish. You are at resistance, not at support. We hit resistance here, right? So we hit the target box, and then after hitting resistance, you have bearish CVDs as well, which is important. That's a sign of local weakness, and the bearish CVD has now played out. What you wanted to see for the bullish CVD is price to climb back up, right? You want to change the market structure, because since we hit the resistance here, we only had bearish local market structure. So you want to change the market structure again and then create higher highs, higher lows with bullish CVDs, but that's not what we got. We hit resistance, we have bearish market structure here, lower highs, lower highs, lower highs, bearish CVDs, and the bullish CVDs are at that moment in time less relevant. If you cannot read counter CVDs very efficiently, just wait for one of the CVDs to play out. Yes, you're going to miss potentially a part of a move, but at least if you get more bearish CVDs at a later stage, you have more proof of a bit of structure here locally. Now, if you then look at the news, we of course have some news today, 2:30 p.m. Central European Time. I will be live on YouTube Thursday, tomorrow also, and Friday as well. So make sure you trade safe because there might be some volatility on the chart. Not that we have a lack of volatility at the moment. And if we then finally look at the probabilities of the scenarios, then on a daily time frame, at the moment the probabilities are higher for the bullish scenario, which is the multi 1-2, where we are then looking for another 1 and another 2. And then on the number 2 spot, we have the bearish scenario, which is the flat structure where you expect a wave C to move below 49k preferably. Now the bears would need an impulsive move to the downside and the bulls need corrective structures to the downside. At the moment, price has been moving up, 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 volume increasing. There's no reason yet to think about a daily bearish scenario moving below 49k. But what you're going to be looking for is the bears for a wave C down need an impulsive structure, 1, 2, 3, 4, 5, or as a bare minimum, a diagonal, 1, 2, 3, 4, 5, correction, continuation. As a bare minimum, because that's how the move starts, right? While the bulls only want to see corrective structures to the downside. So what bulls want to see, like here, is a 3-wave structure. Corrective moves, that increases the probabilities to continue higher and take out the high. On the 1-hour time frame here locally, the probabilities at the moment are highest to wait for a wave 4 to form, something that we've been talking about as this move has been progressed towards the upside, hasn't changed yet, so let's see what we get today. I hope this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.